This is Eric Muadhi with Muadhi.com for October 29th in the wee hours of the morning after a huge 888 point gain on the Dow, and many of us are scratching our heads trying to figure out, what next? Do we sell this rally or go short at the open? Right now markets are called to open anywhere from 200 points lower on the Dow, or give or take. Right now they're trading about 140 points. The futures indicating a lower open. When we ring the bell at the open, what my charts are telling me is that even though being short this market has been the right strategy, and perhaps still remains the overriding strategy if you are to pick a side, but I really do have to caution you from being too sure about going short this market. I guess this video is just to tell you, be on the lookout for short squeezes, because there are a few things that are coming together in these charts that are starting to form some sort of a bullish case for now. This might be just for today, or might even going into the next month, November, or the first half of next month. The markets are not looking as bad right now, with a slight direction of feel that more than likely we might be seeing lower prices. But there is also the possibility that yes, this market might surprise a lot of people and continue chugging along to the upside. And this is contrary to most of the thought out there, and that does make a lot of sense, because when everybody starts believing in a strategy, when it starts becoming very easy, markets are very good at doing exactly the opposite. Now let's go to the charts. It's a Nasdaq 2-year weekly. Now you see that we've spent the last couple of weeks trading in this secondary lower sentiment, this drop from these levels here. Now we are trading at these levels, and we seem to have found some kind of support here at the lows of this price channel. That seems to be holding for now. What is more important on this Nasdaq weekly chart is this double bottom that seems to be forming now. Double bottoms on the RSI or double tops are not. These things are not broken very easily. They do get violated, but for the most part, when we look back next week, in the weeks to come, we are gonna see this formation intact, more than likely. And what this tells me, even though we might see some market pressure on the downside midweek, I suspect by the time we close this week, this formation tells me we either close around current levels or higher, slightly lower, but at least we are going to be positive for the week, so as to maintain this double bottom on the RSI. Now that's the weekly. Let's look at the hourly on the Nasdaq, and this is where I think the shorts might have a case right now. And even though we've moved above these price channels for the first time since September, we just moved above that in the last hour with that strong surge in the market, very strong indication of some kind of price change. But what we see is that we walked dead cold into the RSI top line's resistance. We stopped dead cold at resistance. So I don't know how we're gonna open, but what usually happens when you get the price moving out of a channel like it did right here, sometimes what happens is that you come down, might even trade lower here, but eventually at some point in the coming hours, maybe tomorrow or sometime in the week, you eventually move and close above and break out of these levels, and now that becomes the confirmation that you need to go long. For now, given where we are, we seem to be finding resistance, so more than likely with the gap down at the open, that resistance is going to be confirmed. And as long as markets stay below this RSI top lines, then there is case for us to remain on the short side. But for now, this remains to be seen. We might, move lower and then eventually at some point break out of that. Now, the moment you see that RSI top lines, this RSI top lines being violated, then you know that you need to go long this market and close your short positions until some other indication of market direction. So that's that for this chart. Let's look at the Wilshire 2000, Dow Jones 5000, Wilshire 5000 index, and you see once we moved below this black RSI support line, what was support, the once that was broken on the downside, the market accelerated lower. We've hit this line twice. This is the second time. We had resistance here a couple of days ago that drove the market lower, and now we are back retesting this line. I don't know where we go from here, but for now I can see resistance forming. If we can move above that, then we again go back and head lower. So for now, short-term resistance on the back test, and that tells me just to either expect it to be broken for the market to continue higher, or for it for the resistance to hold and for this market to continue being under pressure, and the move on Tuesday becomes just another dead cat bounce. And that's why I'm not sure what direction to take right now, because I see, you can take either you can take either argument. But what I do see, and I talked about this on the MACD, we are seeing that the MACD now might, because now we have this failed crossover attempt. Now we are below it. We are trying to move above this. So if you see this on most of the daily charts, if you see the RSI, the MACD finally moving and crossing over now, if you see a crossover and move above this prior failed attempt, the highs of the prior failed attempt, then that becomes an indication that for sure this market wants to move higher, and that you can expect this move to last longer than just a couple of days, a couple of hours. This might even last a couple of weeks if we see this crossover confirmation at any time. Again, this one chart shows you conflicting indication that this market could go higher, could go lower, and I don't know which way to, for sure, which direction to take. But I know for a fact we just need to not to be so sure about the markets going lower from here or higher, because you can make a case for both. This is the energy index, NYSE, and we see we are just bumping into price channel resistance at the moment. And again, the RSI is smack dead on resistance. Where we go from here, I don't know. If we move higher, it gives the bulls in the energy sector some leeway to drive prices higher in the short term. But for now, they stopped dead cold on resistance on the 1 year daily. Again, what I like about this index is that I'm seeing the MACD just starting to pierce and move above that prior failed MACD crossover. The black line is about to make new highs for the month of October after this drop. This is a small indication. You can start to sense that the bulls want to press their case, and if they keep moving this index higher, especially on a closing basis, then now we can start looking at some plays in the energy sector for a strong move.